Welcome back, everyone, to another incredible podcast episode. This is the Kingscrowd podcast. I'm your host, Belley, joined by Scott Kitun and Teddy Lyons. Today, we're going to be breaking down something that a lot of you have probably heard about, a lot of you are maybe interested in, or are just hearing everywhere, which is the SpaceX IPO that's coming up. We're going to be breaking that down, everything about it in terms of the revenue sources. Do we think it's overvalued or not? What does this mean for the private markets? We're going to be getting into that. Before we do, just wanted to do two quick plugs for some events that we have coming up. First off, yours truly here, Teddy Lyons, is going to be on the Superpowers for Good live show. That's this Wednesday night. Feel free to check that out. You can just search Superpowers for Good live. We'll also drop a link into the podcast notes. In addition, next week, if you are around the Atlanta, Georgia area, Chris Lustrino, CEO and founder of Kingscrowd, and myself are actually going to be there in person for a live pitch event. So if you want to come hang out with us, we're going to be having 5 amazing founders who are currently raising online come and pitch in person. And there'll be a group of really awesome investors that are there to listen to the pitches, just some general networking, really good IRL opportunity to come and meet us and hang out with some cool founders and investors. All right, with that, let's get into the show for today. Now, normally this show is, focused on the online private markets, things that are happening, but we're not really stepping outside of our usual lane today, but we want to talk about one of the biggest private company stories in the world, which is now going to be becoming a public market story, and that is SpaceX. So for those of you who probably are familiar, SpaceX has filed its public IPO paperwork with the SEC. It has already amended that filing, but basically SpaceX is reportedly preparing for what will almost certainly be the largest IPO in history. They are looking to raise $75 billion at a valuation potentially approaching $1.8 to $2 billion. Now, this is not just a rocket company IPO anymore. SpaceX, as the filing presents, and as many of you have heard, is much broader space infrastructure company. It's kind of built around 3 pillars, and I say space infrastructure, but there's launch and space transportation, there's Starlink satellite connectivity, and then as of recently, they now have the rapidly expanding AI infrastructure through the XAI business and everything related to that. So Teddy's going to be helping us to break down some of these revenue numbers and kick it off the discussion. But before we do, just to frame this right, what does this mean for Kingscrowd listeners? If you're interested in this market, you probably are invested in private market opportunities beyond just what's online. But I think some of the interesting questions the SpaceX discussion is going to have today is not just, is the stock a good potential investment or not? This is not investment advice. We're not going to be getting into that. But it's what this IPO may be saying about the private markets in general. So SpaceX is a company that's been private for more than 2 decades. They've just raised enormous amounts of capital. They've given some employees and insiders liquidity through secondary transactions, but it's probably the most anticipated IPO of this year. And potentially you could say more than that. So let's unpack it. We'll get into the filings, evaluation, what investors are saying. Teddy, I'm going to kick it over to you first as our resident senior investment associate, the investment analyst. Why don't you break down a little bit more of the SpaceX IPO for us, and then we can get into some of the discussion.
So I just want to quickly kind of run through each layer of the business and the sort of financial profile in each, because obviously, there's a lot of noise around this IPO, and obviously all the coverage leads with Elon and rockets and all that. I think the financial picture, if you kind of drill down, is a bit more interesting and complicated than that. So as Brian mentioned, SpaceX today, 3 businesses: space, connectivity, and AI. And if we look at sort of the Q1 of 2026, so of this year, total revenue for about 4.7 billion. So this is the kind of overall revenue. If we kind of go into the broken out revenue, which is available in the S1, we see here that in Q1 2026, the space portion of SpaceX, so that's Falcon 9, Falcon Heavy, Dragon, the commercial launches, the NASA contracts they have, the DoD missions, things like that. Kind of really what put SpaceX on the map. That accounted for $619 million in Q1 of 2026. So that's just 13% of overall revenue. And what's interesting is that's actually a 28% decrease from Q1 2025. Now, what's interesting here is SpaceX actually launched 40 rockets in Q1, which is more than the 36 that they launched in Q1 of 2025. Now, how does that reconcile? 33 of those launches were internal launches, meaning SpaceX was launching its own Starlink satellites as opposed to kind of majority paying customers that they used to do. They say this pretty plainly in the S1. If you look in, all right, yeah, so if you see here, we expect space revenue growth to continue to be lower than total company revenue growth as our internal business continues to absorb most of the growth in our launch capacity. So that's really saying they're deliberately sort of diverting rocket capacity away from paying customers because that sort of downstream opportunity of launching their own satellites and their own payloads is worth more than the launch fees that they would be getting and that they've kind of previously gotten. So the rocket services really is no longer the product of SpaceX, I'd say. It's more kind of building their infrastructure of the connectivity side of their business, which if we look to the next section here, the connectivity side, this is Starlink. So this is their kind of internet service that they're launching with over 9,000 of their own satellites to basically provide internet anywhere in the world. So if you look here in Q1 2026, about 3.3 billion in revenue, which is 70% of their revenue came from connectivity, came from Starlink. And, there's a lot of things we could go into about Starlink. They have 10.5 million subscribers, which is up 100% from last year, operating in over 100 countries. This is really the core of SpaceX's business right now. And obviously, I think SpaceX has a lot of big moats, but this is kind of a huge one of the capital required, regulatory clearances, launch cadence. Obviously, no competitor, it would seem, is kind of even within a decade of matching this sort of almost 10,000 Starlink constellation that they have. And then lastly, the newest segment, you could say, is the AI side. So 818 million of Q1 revenue, which is about 17% of total revenue, came from the AI side of the business. So that's Grok subscriptions, X subscriptions, data licensing, and their kind of broader AI compute build out that they're starting to, rent out to people as well. So many companies are investing extremely heavily in AI infrastructure build out. So it's no surprising here in the S1, SpaceX says, they expect the AI side of their business to be, a multi-year investment horizon before those investments really translate into sustained positive unit economics and positive net income.
We're already seeing Anthropic though is paying them 1.2 billion a month, I think, right now to rent out Colossus, right? So it's
for
that
sure
right there eclipses the monthly revenue they're getting from one Anthropic customer to rent Colossus or Colossus 2 has already eclipsed their entire 2026 revenue.
Yeah.
And that's just
exactly.
That's just one of many.
Yeah.
For sure. Yeah, I think I just wanted to highlight here is, the connectivity side of their business. This is the only pillar of their business that has positive operating income. The rest in the space, they're really investing heavily in developing the Falcon rocket, which they think will really unlock the kind of next stage of both Starlink and what we can get into. Brian, you probably know more about this, but the orbiting data centers type of thing. So I think kind of what ties these three revenue lines together is the current Falcon 9 rocket can't deploy, it says this in the S1, cannot deploy the next generation V3 Starlink satellites, too big, too heavy. And Starship is really the only vehicle capable of carrying them, as well as the orbital AI satellites, the kind of those orbiting data centers. Those need Starship to launch and kind of turn that sort of vision into a reality. So if you look at the sort of operating expense, the capital expenditure SpaceX has made, it's really in developing Starship, which can long-term, and really what you need to believe in is that can really unlock the future of the Starlink constellation, continuing to launch the newer versions of that, as well as the orbiting data centers, which according to Elon, will sort of solve the compute constraints that we have here on Earth. So before we sort of move on to the IPO itself and the sort of dynamics of this massive valuation and kind of how that impacted early VC investors, things like that, thoughts from you both on just the overall financial picture of SpaceX as they approach IPO?
I mean, so many interesting things in this S1. I want to turn it over to Scott, but like just one of the other ones I feel like I have to call out is the fact that Elon also has options that are tied to a permanent Mars colony as a part of these filings, right? Where I think it was, if they hit a permanent human colony on Mars with at least 1 million inhabitants, he's going to get 1 billion performance-based Class B shares, which which would be, I think, like a 7.5 trillion. Essentially, I think if they hit essentially close to a 7.5 trillion.
Yeah, so there's all these sort of restricted share unlocks at all these different market caps.
There's the whole there's so many. He fully believes that's going to happen.
Hey, I am not betting against. You don't bet against Elon.
I think we're going to colonize Mars. I think that's what's going to happen.
It's just so crazy to see this in an S1. Company's establishment of a permanent human colony on Mars with at least 1 million inhabitants.
He gets to plant the flag. He gets to stick the fucking flag in the ground.
Yeah, and I think it sort of goes into like when the valuation is this high going into the public markets, it's like you have to sell, like so much of the value creation's already happened. So it's like you have to kind of sell this very Star Trek-like world in order to get people excited. I mean, I as you said, Brian, like I hold the opinion that betting against Elon's like not the best spot to be, I think, in my opinion.
Dude is the most directionally right entrepreneur of probably the last 100 years. If this all plays out this way, it certainly becomes even more than that. There's just like, he is so good at being relentless towards not going backwards. Like he's pushing forward, even if it's going to lose. Buying Twitter is the same thing. Like I'll find a place. There's a world where it matters. Right now is not the world. You don't see it. Don't worry about it. He just hangs around the rim. There's a putback and he dunks the shit home. And sometimes it is a miss. And he's had companies that are a miss. I mean, PayPal was the same story. Tesla's the same story. SpaceX and XAI are this story. That's why you combine them. SpaceX, just to give you an example, we were talking about the retail impact. Certainly not retail. My former investor at Songfinch, Antonio Gracias, who runs Valor with John Shulkin, he loaned Elon Musk $1 million in exchange for grants and stock in SpaceX when it was going to go out of business. When this IPO happens, if it is successful, he will make $140 billion. That's not a typo. $140 billion. And all of the people who listen to this show, shout out to our guys Stefan and Wyatt and Alts who have their own SPVs and secondaries, and a lot of you guys on who are on Kingscrowd are part of these things. This is ideally a place where you're going to be able to get a little bit of money out. It may not be the massive $140 billion that Antonio Gracia is going to get, but if you came in a secondary that placed this at 50 billion, 80 billion, 100, 200, 500, almost a trillion, 800 billion, I think was the last one I saw. If it comes out at $1 trillion and you sell your shares, that you at least may get yourself out if you don't believe in the long-term theory. If you were in it like a half a trillion and it goes to 1.85 trillion or whatever the case, anywhere between 1.75 and 2, you're going to have a pretty good payday in about 12 to 18 months of hold time. So I think that and by the way, there's a ton of retail investors who participated in these secondaries. So I actually think that might be the biggest cash flow exit to retail investors, private retail investors, and the lifetime of private, the private market, kind of retail private market that we talk about. There are, of course, the not as great stories for retail, which are the people who did SPVs that were stacked on top of SPVs that we eloquently call SPV lasagna, where they're going to be paying 30, 40% carry in addition to fees on top of fees on top of fees. And hopefully those guys, either are able to get out or they're able to have their stock stay in, this newly publicly created company. I just want to touch on a few things that you brought up, Teddy, because I think they're important. And I think it's interesting. I brought up the Antonio Gracias part of this, not just to show how big the numbers are, but to show you that what is being presented to the public markets right now is effectively the opportunity of a lifetime to invest like a VC. Antonio Gracias invested $1 million when there was like very little upside potentially because the company was about to go out of business, and he had to hold it for 12 years. And now it is going to be a massive outcome. The request that's being asked for public markets, I don't believe, is to look at how much business we do with Starlink, how much, our space rocket defense business does today. I think that's to basically show you that we have this moat. We are the only ones who have the capability to do what we think is next and what we think is the biggest opportunity financially and potentially human-wise in our lifetime, which is data centers orbiting Earth and other planets and making the ability to stay, which is one of the biggest problems. Brian, again, we'll rely on you as a rocket scientist here to step in. But one of the biggest problems with space travel is very similar to under ocean travel, which is connectivity. At a certain point, you lose contact with whatever you're sending out there, and it becomes impossible you're on like a suicide mission from day one, not to mention speed of travel and, re-energizing and everything else. And there's a lot of things that have to be resolved, by the way, to have a floating digital orbiting data center. Like half of it is going to be in complete blackness half the time. Like there's efficiency things that need to be figured out. I wouldn't put it past Elon and others to figure it out, but I would tell you my instinct is that they are making you bet on a future that is where SpaceX is the business, SpaceX AI, whatever the fuck you want to call it, is the business that has all of the rights for travel, is the de facto carrier through Falcon 9 and the others and their, whatever new ships that they had a building for specifically for this. But they effectively own communication and power all of these companies and LLMs that are going to rely on, all the AI that they want you to believe is going to take over the world. It's all going to run through that. And they're the only one to do it. And that's the bet they're making. They're pricing that in. So you're going to come in as a retail investor at quite a premium. And the question as to whether or not you should get in or not is, I guess, if you want to get into a hype cycle, that's a different thing. There's plenty of people who've gotten rich playing Elon Musk hype cycle. But the second more important thing is, do you believe within the next 10 years, we are going to be traveling space with regularity and operating most of our AI and data systems through Elon Musk-led companies in space? And if you believe that and you believe you'll accomplish that, then it's a good price. And if you think that that's fucking crazy or it's just not realistic, then it's a really bad price and you're probably going to lose your money because you're going to get, nervous and sell pretty quickly. So I think that this business is, what you see in the S1 is proof of what they've done to get to a place where they have a opportunity that no one else has. And that's their sales pitch. And I think again, whether you believe it or not, that's up to everybody else. But I do believe that's how it's being presented. And, if I was an early investor in SpaceX, I love it. If I'm not, I probably don't touch this one for a little while, would be my, not investor advice. Just, I would not want to do anything with this until I understood it. And right now I can only go off of my assumption, and usually, you know what they say about assumptions.
So Scott, I think you said a bunch of things that were really interesting. One of the ones I maybe want to double click on is you said potentially this could be one of the biggest exit events, right, for retail, potentially ever, based on the number of people who invest into these SPVs.
We'll see what happens with Anthropic and OpenAI, right? Like that's the other one where people are a little less jammed in. I don't, maybe you guys know the answer to this. I don't know where the XAI secondary stuff, where that is, it in this too. I know they've combined the companies. I don't know how that all works, but if you're including that, which was like all the rage like about a year ago, then this, then you're combining SpaceX and XAI, which at this point is quite literally is a data center rental company. Like they've all been they did the contract with Cursor, but.
I could definitely see that as well from the numbers from a retail side. Now, when we say retail, non-professional, right? Not VC, not private capital, that sort of thing.
But accredited.
But you still had to be accredited for all of these deals. This
unless
wasn't
you
something
bought the mirrors from Republic. This is a great opportunity. I mean, I'm joking, but this is a great opportunity to find out what that is. We've talked about.
We're going to see what that looks like.
Correct.
100%. Right. So we're going to learn a lot. My question is, what do you think this means for unaccredited retail who was not able to get access, but might be clamoring to get access to, are they going to be the exit liquidity for a lot of these VCs and others who invested earlier? Or do you see this as still, I guess that's more of maybe a supply and demand question of it really depends. Where do you think SpaceX is going to go post IPO? Do you think this tells us anything about the private markets? Just that, SpaceX stayed private for 20 years. Yes, there was a lot of accredited investors who were able to invest. Does this change anything in terms of how companies in the future might operate if they see how SpaceX does after doing this? To companies, we've already seen companies with a trend staying private longer. Does this even reinforce that more?
I think it does a couple of things. You're going to have to tackle me digitally to get me to stop talking when you're ready to move into another segment. It's such a great loaded question because it really is like maybe one of the defining things of investment moments of our lifetime. We've talked about the big seven or so, and the market's taking up so much of the trading volume and the consolidation. A few weeks ago, we talked about the consolidation of funds. The consolidation of data and access, that's what this is. And so if you think about it, like we being you and I, but also people keep saying, when are we going to open the floodgates for IPOs? And I'm sitting there going, fuck you talking about? Because there's like 6 or 7 companies that are lined up, and they're the big ones that we've been talking about constantly. Stripe is the only one that's not really an AI business. The rest are. And they have raised in the hundreds of billions of dollars. And you look at this company, 1.25 trillion valuation, maybe 2 trillion, 1.8, whatever. The advantage they have by going public is that the public is massive and there's a lot of money. But like not everyone in that public is, Antonio Gracias level wealth. So somebody's going to have to fork over that 2 trillion to make it real, and to give Antonio Gracias 140 billion. It's nice to have the valuation, but that doesn't mean anything. I say that because if Anthropic comes next, and by the way, from an enterprise value standpoint, they're kicking the shit out of OpenAI. So I can't wait for that S1 when they show that their enterprise business is insane. It's like $45 billion or whatever it is. The 20 billion in revenue SpaceX did is at a losing nature. That's not the case for the enterprise side of Anthropic. So when that goes live, that should theoretically be more at the price point they're going to come out. It should actually be a better value. Again, assuming you don't believe the big data centers in the space thing. So now you need another trillion of public capital. And normally these are index funds and retail investors that make up the majority of these purchases. So let's do, napkin math. Look at the general volume, trading volume on Robinhood alone. Obviously that's not the only place, there's many, but like look at the trading volume daily and do the math. I need $1 trillion over the next whenever they go live, over the next few weeks of that. I need another $1 trillion invested when Anthropic does. I need another $500 billion to $1 trillion in space, or when OpenAI does. Stripe is now there. There's only 5 or 6 companies that are going to really come through here. And what we're going to start to see is just, again, further consolidation. There's only one space and data center company. There's only one consumer AI company. There's only one enterprise business AI company. And they all eat data and compute from the same freaking company that's about to go public, which is SpaceX XAI. And who do they feed? They have a deal with Cursor. Well, what does Cursor do? It's a circle. And who's buying it? From NVIDIA. And where does NVIDIA get their chips? TMC. It's a fucking circle. And there's only 7 or 8 companies that make this up, and there's multiple trillions of dollars that need to go inflow from retail to do that. At a certain point, there's just not enough money. And unless those firms continue to grow in their size and their capital is replaced by institutional hedge funds and so on and so forth, which will happen. But until that does, we're like, what happens next? Like, do you know what I'm saying? Like there's just not there. We're used to having a flow of a dozen or so companies go public, and you can pick and choose where you want to put money in. And that's still going to happen, right? Like small companies will still go public. But these companies that are going live are hogs. They're not taking in $1 billion. They're taking in $1 trillion, and they need to be $1 trillion. Otherwise they're like insolvent, right? So like,
well, but like something you said, so index funds, there's been a lot of news around index funds like the Russell and others actually changing their process to fast track it to normally it might take a few months or something else to get it. They want SpaceX to be a part of their index as soon as possible. So if you're an index fund investor, even your 401k, whether or not you like it, if they go public at a 2 trillion valuation, that makes SpaceX probably the 6th or 7th largest company, like in the S&P. you're going to have 3% exposure if you just hold the S&P to SpaceX through your index fund holdings, whether you like it or not.
You
which
read money stuff as well.
Has some of that demand, but yes, it did. Matt Levine's great. I don't know, Teddy, where's, you're coming from an investment banking background as well, in the past. How are you thinking about all of this in terms of just the IPO mechanics and whether it's SpaceX or the ones following behind it? What are your thoughts?
If you look at it, there's like 25 different investment banks working on it. There's the big five at the top. Yeah, I think the banks are excited for this. They're going to make some massive fees. They've been clamoring and baking off for this opportunity for a long time. So yeah, I think it's a big win for all the investment banks. And we were talking about the index funds there. I think what's also interesting is if you own Tesla, you also have Tesla has a direct financial stake in SpaceX. I think they own like 20 million shares. So like you're also like partly indirectly exposed to SpaceX, and you have been as a Tesla investor, which is interesting. I just think there's the cross-pollination of Elon's companies is super interesting, and we'll see. SpaceX might even acquire Tesla eventually too.
There's a lot of pressure on Tesla to have to come out with either Cybercab to work as advertised, or to come out with a new car product or multiple car products that replace X and S, Model X and S, which they just retired. There is, and we've seen this before, he's not the first publicly traded CEO to have multiple, or founder to have multiple publicly traded companies. The pressure that will fall on him and Tesla and the scrutiny when times are divided and attention is divided and he's building something that very clearly benefits. I guess the only thing that I would keep an eye on as an investor here, I think it's really an interesting opportunity. Teddy, you should try to do research if you can on this. I'd be seriously interested. The solar component of Tesla. Is there a play where Tesla uses their solar energy business to interplay with SpaceX in the data center business and start becoming an active player, an active government contract, which currently Solar City's basically just been dormant? It exists. I have neighbors who've got these panels on their roof, but it's not a huge business. That there is a world where these things start to connect. And I would never put it past Elon to do that. If I'm him and I start to see pressure mount on either side of these two companies, I'm trying to find the line to put these shits together because it would be bad, right? I mean, that would be.
I think that's the idea of the orbiting data centers is they'll be solar powered and
right.
Yeah, he plays in that space.
Solar City is there. I mean, yeah,
for sure.
I don't know. It's interesting, but anyway.
Yeah, it'll be interesting to see because as he'll be CEO of two publicly traded companies, Tesla, we know there's issues and lawsuits around his pay package and governance there, whereas SpaceX, like he's gonna own still gonna own 86% of the voting shares of SpaceX after they go public. So it's a really hyper centralized governance framework there where he really has absolute control, as opposed to the Tesla, which is quite a different.
Well, he had to give that up. But now he's got so much power accumulated. I actually think while it's insane to have a single person with this kind of power at this particular moment in time that we're in, having a company like that managed by other people, I actually think would be a disaster. I think the only way to get a company that has this kind of ambitious plan forward is to have a fucking lunatic running it. I mean that respectfully. Like you saw that with Model T and Ford, and you've seen it with Hughes and the airplanes, and you've seen this time and time again. When we make monumental shifts technologically, industrially in any country, but just in human civilization, it takes a person who's completely laser focused with no rules to make it happen. Otherwise it turns into shit. So I don't know. This is going to be real. Honestly, it's going to be weeks of podcast fodder because every week is going to be a whole new. I mean, we're out of time on this, but we didn't even talk about what happens if he only raised $75 billion, which isn't going to happen. But what if it did? Now he's got $1.8 trillion company on paper that's worth $225 billion in stock. It could be bad really quick.
I think, the float, they're not going to have a lot of shares trading to start too. So I think, they'll raise up to 75 billion at whatever the valuation is, 1.8 or 2. But I think like you said, Scott, we're going to learn a lot of just the stories that come out. All these SPVs, we haven't really seen any big IPOs that have had some of these lasagna SPVs, as you like to call them, right? This is one of the first ones coming out, but a ton that have been done since then. Anthropic, OpenAI, like we could name all the names. Like we're going to see and probably hear some of the stories. And like mirror tokens, there were a lot of critics saying that, hey, it wasn't going to work. But if those people get, I forget what the valuation was, 400 billion
on the show right now.
They might get a 3x markup in a year, a little bit less, but we'll see. Again, some of the worry was like, hey, are the shares actually there? How does that work?
I hate to be the guy to bring it up, but the last time we saw this kind of thing happen was during the SPAC craze. Chamath made it very clear that what looks like the right thing on paper when it goes public may not be. Preferences matter, as it turns out.
If you buy SpaceX, everyone should already realize if you're an S&P 500 holder or anything else, you're going to have exposure to SpaceX, right? So maybe you don't even need to, but let's say you want to buy it. Am I investing in a space company, or is it an AI company, or is it a future Mars colony? Like how do you think of what you're actually getting when you invest in SpaceX today?
At $1.75 trillion valuation, I'm investing in the future of solar orbital data centers. And I think you can even, this is so stupid, but I think it's true. You could even point back to the GameStop dude being like, we're just going to shift to like making, or it wasn't GameStop. Who was it? AMC? Who is the one that came back and said, we're just going to invest in, we're taking the money that we got from the retail craze and we're investing in data centers.
Allbirds.
Oh, Allbirds. Thank you. Yes. So Allbirds, this isn't, it is like as crazy as that is, it is a real business opportunity because if you believe that the future is going to be powered, like it's going to be so AI centric that we're in a compute energy, that's where we need to create more energy and compute and so on and so forth, like, and also connectivity and also space. We're about to see all the aliens that Trump's going to release in the files. So we got to get the fuck out of Dodge. If you believe that, then that is the business that you're investing in. And if so, I would argue that $1.75 trillion valuation probably isn't that bad because it's going to be the most important business of our entire lifetime. So it's not a bad deal.
Being an aerospace guy, like I love the orbital data center thing, but there's a lot of technical risk there. And that's not to say like it could still be better doing some of this stuff. There's some limitations of latency, so maybe some of the data centers go off. Is that like the best case where all data centers are going to be there in the future? Maybe not. Like there are some advantages with the solar and cooling, but it's technically hard. I think what they're trying to get to though, I think, and this is just like listening to a bunch of the tech nerd podcasts, is like it's about creating a mesh system. Like think about old Google Mesh. You wanted a couple of things in the ceiling in the basement, and you wanted all your power everywhere. Yep. They're trying to create a mesh system where you have local compute, local power on your iPhone. That's why Apple's telling everyone that their chips are built perfectly for AI, whether it was on purpose or not. You want local power. You want access to remote local power for cloud compute, for local memory. And then you want to have access to this global power resource, which enables this to travel back and forth at the speed of light and be accessible from anyone, anywhere across the globe, and now apparently the universe. That's the system that needs to be developed, and you're betting on at 1.7, anything over 1.5 trillion, that is what you're betting on. Below it, you're either overpaying for a company that has 3 really interesting assets that are yet to be proven profitable, and at $1 trillion, maybe under $1 trillion, it's probably a good deal. So if you got in as a secondary 6 months ago at 800 billion, you probably did get in a good deal. It's a pretty good risk. We'll wrap it up there. I will just tease. So next week, we'll probably be diving into some of the numbers for the online private markets. Saw some interesting activity in May that we'll probably be covering. So feel free to check us out then. And then the IPO is, I believe, the 10th or the 11th. I think it's maybe next week, next Thursday. So I'm sure we'll be covering that the week of the 15th. But until next time, thank you guys. Thank you everyone out there for joining us. We really appreciate you. And if you have any other topics you want us to be talking about, any other hot IPOs, investment opportunities, startups that are raising in the online private markets, feel free to leave us a comment or send us a note. Until next time, we'll see you back here.